Hi, I'm Jason Gibbons, and we're going to discuss my comparative company financial analysis for Rite Aid. And we're going to determine would I invest in my financial capital in this firm as a shareholder, and would I invest human and intellectual capital in this firm? So first, just a little history on Rite Aid. Rite Aid is it's a drugstore chain operating in the United States, nearly 100,000 employees. It is a Fortune 500 company, a large company. Now they've had a sequence of bad quarters in a row, which has really impaired their stock valuation. And the company is third in the ranking for their segment behind Walgreens and CVS. Actually, they're quite a bit behind Walgreens and CVS. And as a matter of fact, Walgreens recently was going to purchase Rite Aid, but they ultimately ended up buying about half of the stores, of the Rite Aid stores, leaving just about 2,000 stores remaining for Rite Aid. So as far as the financials go, the most recent full year shows just over 30 billion in annual revenue. Um, like as I said, this puts them as a Fortune 500 company, but they are significantly weaker than the industry leader, which would be CVS. Some we'll go through in just a moment and compare CVS, some of the ratios to Rite Aid's. It shows just how big the difference is. Um, so Rite Aid is their net sales in their most recent quarter, 7.6 billion, compared to CVS was 45 billion. Now that's net sales. Net income was just over 100 million for that quarter, and for CVS it was just over 1 billion. So the results comparing the net margin for the two companies, Rite Aid 1.39% versus CVS was 2.4%. So going into their assets, 5 million in current assets for Rite Aid versus 690 for CVS. So quite a bit more there for CVS in current assets. Total assets, also a big difference, 11.5 billion for Rite Aid and 92.5 billion for CVS. Rite Aid has liabilities, current liabilities 3 billion, long-term liabilities 10.7 billion, versus CVS, 26 billion current and 33.5 billion long-term. And when you compare some of the ratios, let's take a look at a couple here. Return on assets, for Rite Aid 1.85%, CVS 6.58%. Substantially higher return on assets for CVS compared to Rite Aid. Return on equity is very similar, 13.2 for Rite Aid, 14.2 for CVS. Revenue per share 30.66 for Rite Aid, 176.61 for CVS. So we can obviously see a big difference between the two companies. So deciding whether or not you're going to invest in a company, when you look at these two companies, obviously CVS seems like a lot more stable, a lot more financially stable company. But stability is not the only thing that you look at. Obviously, the rate of return is going to be important for us as well. So to look at that, we looked at the beta for the two companies. CVS had a beta score of 0.55, where Rite Aid's was 1.58. Now, the beta it's used to measure the volatility compared to the market fluctuation. So the higher the number, the more it fluctuates when the market fluctuates. So Rite Aid actually has a bigger opportunity for return. So as an investor, that's something that I weighed heavily on my decision here, that there is a much higher rate of return with Rite-Aid. Now, they're much more leveraged than CVS. Obviously, like we just talked about with some of those ratios, they're not as efficient as CVS. We talked about with some of those ratios, but they've sold off a lot of stores to Walgreens. They've slimmed down their operation. So I think that slimmed down version of Rite Aid is going to give them the opportunity to potentially have a bigger rate of return than CVS would. Now, CVS is going to be lower risk, and Rite Aid is going to be higher risk. So that's definitely something to keep in mind. But then also when you look at the price per share when you're comparing these two stocks, CVS, when I pulled this data here, their previous close was $71.09. And you compare that to Rite Aid's was $1.79. So obviously a pretty substantial difference there. And when you look at a company that has a potential for a high rate of return with Rite Aid, if they are able to have a couple of good quarters or even one good quarter, their stock would increase at a higher percentage than what would CVS's. So yes, I would invest in Rite Aid. Pardon me, I would invest in Rite Aid. It is a high risk investment, but I would on the potential of the high rate of return. So thanks for listening today, and good luck. Thanks.